Morning, everybody. This is Eureka John at Eureka Street Crypto Hub, broadcasting live on Theta TV at 6:39 in the morning, May 8th, 2021, broadcasting Central Standard Time from Leander, Texas. And yes, it looks like it's going to be a nice day out today. I'm up early as usual doing this deal. I have been broadcasting live every single morning, touching on crypto projects and crypto news and just whatever I happen to have read the night before. I try to do this as part of my own personal development and growth, and I'm documenting it. And so this is my video blog and not any type of official advice or professionalism in any way, shape, or form. I'm just a dude with a camera turned on me, just talking about new things that I discover daily in crypto. Every couple of weeks I'll do a focus on a specific project and make a specific longer format project oriented videos, but I try to keep these down to 30 minutes and just kind of basically just touch on some new things I found just to let them know you're out there, know it's out there, and then maybe kind of bookmark it mentally for me to remember and then go back to it later, and if I'm really interested in it, looking at in more detail. So that's basically the scoop of what I'm doing, and I've been doing this since every single morning since February 6th for about 3 months now, a little over 3 months, and then I've been doing this broadcast since October 24th, 2020. And between then and February 6th, I was just trying to figure out what days and times worked best for me. And, pretty much every day in the morning works for me because it's the time before all the kids get up and all the chaos in the house ensues, and before I need to be at work as well. So that's that. So let's take a quick look at the crypto market. Every single day I do take one quick look at the crypto market. I try not to spend too much time going down through all this because you never know what mood the crypto market's going to be in on a day-to-day basis. That's for sure. That's what I'm learning, that all you crypto heads and people in finance in general, just such an emotional lot. You guys are really just, especially if you follow crypto Twitter or any type of Twitter, I mean, just people get so emotional about any minute swings in the market. And I'm a dollar cost average guy. I'm not a trader. I don't know enough about TA or trading or anything like that to even shake a stick at it. But every paycheck I get, I put a little bit into my portfolio, basically. Some into Bitcoin, some into Ethereum, and then some into altcoins as well. I don't even call it Ethereum and altcoin anymore, really. So anyway, Bitcoin's at $58,657.87. Ethereum's $3,552.98. So it's kind of made its mark and it's dug in and pulled up a chair at 3,500. So that's pretty cool. Binance 633.76. The Doge still at 71 cents. I keep on saying I got a bad feeling about it, but we'll see here. Actually, Andre Cronje, I bookmarked one of his tweets. All right, let's get over to my tweeter. My tweeter. And all right, let me go to my bookmarks here. I just saw this really early this morning or late last night. I think it was late last night. He said, I don't like Doge. It's a meme. But I also didn't like LOL cats. LOL cats captured attention and trained early users on the internet. And what LOL cats did for the internet, Doge will probably do for crypto. In that regard, Doge is probably more meaningful than most. And then he said, just in case the comparison wasn't clear, where is LOL cats today? I don't even know this guy. I don't even know LOL cats. I'm sure the internet would have been the same without it. I don't know. I don't know LOL cats either. But let me see here. I guess I was a fairly early adopter of the internet. I mean, I'm that old where I remember when the internet very first came out. So let's see. LOL cats, funny cat memes. Let's see. All right. So let's see here. Wikipedia. LOL cat is an image macro of one or more cats. The image text is often idiosyncratic and intentionally grammatically incorrect, and is known as LOL speak. It's a compound word of the acronymic abbreviation LOL, laugh out loud, and the word cap, a synonym. I like it when people try to explain, current urban dictionary type of stuff of what something is supposed to be. I saw Wikipedia trying to explain where Doge came from. it's just memes and things like that just happen that are ridiculous, but they take on a meaning all themselves. And and then when people try to explain it, it just sounds absolutely ridiculous. So let's see here. And then it goes back to the origins of British portrait photographer Harry Pointer created a carte de visite series featuring cats posted in various situations in the 1870s, which he usually added amusing text intended to further enhance their appeal. Alright, so just basically cat memes. Okay. I don't see how this has to do with people adopting the internet and what Cronhe's talking about. Trained early users on an internet and what LOL cats. I mean, I guess it trained people on how to use memes, basically, because memes are kind of an interesting form of communication. I would think that pictographic languages like hieroglyphics and even Chinese, in a way, kind of may have originated from some kind of meme-like characters. I mean, you never know. So anyway, that's that. So let's go back to CoinGecko. Anyway, I just thought that was interesting about Doge and Andre Cronje comparing Doge to LOL cats. I was like, man, I'm gonna have to take a look at that in the morning, and I did. Okay, XRP at $1.58, Tether at $1, Cardano $1.61, Polkadot $39.78, Bitcoin Cash $1,409.78, Litecoin $342.91, Uniswap $39.85, Chainlink $47.92. Chainlink did hit over $50, and I think it even went to 51 or 52 a couple times yesterday. Let's take a quick look at this all-time high and see where it's at. 51.65 yesterday, about 18 hours ago. And then that's sitting at 47.92. Hey man, I'm not complaining about that. I like my Chainlink. I think it has a bright future ahead of it. I just recently heard Chainlink God's interview on the Bankless Nation, talking about a lot of the aspects of Chainlink. And if you haven't heard that interview, go to Bankless Nation and check out that interview with Chainlink God. Just Google or whatever search engine you use, Chainlink God Bankless interview, and then you'll find it. And it's on Spotify. I think it's on the Apple podcast and all that stuff. But it's a really good interview. And if you're having a hard time really wrapping your head around what Chainlink does and what the Chainlink, the actual utility of the Chainlink token is, this will definitely get you up to speed on that. And then you'll be able to understand what the actual significant changes that have come out in Chainlink White Paper 2.0 actually are, and what Chainlink is kind of morphing into, because it's morphing into way more than just an Oracle service. And it kind of explains the whole symbiotic relationship of the need for Oracle services, the need for security, and how it and its symbiotic relationship with scalability. So the more a project or a DAO or anything scales, the more they're going to need to invest in security, and that the oracles have an ecosystem that relies on security of the network, that relies on scalability. So it's all in relationship to each other. And I'm going to skip down here to Theta Network at 1260. Okay, cool. All right, so Theta's doing some things here. A lot of people are loading up right now on the T-Fuel for when the staking comes out with the Elite Edge nodes, and then Chainlink. Theta 3.0 and June 30th. People are buying up that T-Fuel and the Theta token, but the T-Fuel because you'll be able to stake it. You need, I believe, at least 1,000 T-Fuel to stake, and then I think the staking rates, the interest rates, are going to be really high right now, the return rates, while they try to get people to onboard with more and more edge nodes. So, but already the edge nodes are getting pretty ubiquitous. So I like that word. And then I'm going to be taking a look at this token. This UBI token is going to kind of touch on what I wanted to talk about today. I don't know if it's on. Nope, this is not it. Yeah. All right. So anyway, we'll touch on that here in a second. I'm going to go to their website and stuff like that. I wanted to touch on an article that I read. I'm a subscriber to the Bankless Nation, and I didn't normally used to subscribe to type of newsletters, type of things, but I am a paid subscriber to Bankless, and I'm a paid subscriber to the Defiant. I do believe that those two have brought me value with a lot of learning tools and explanations and news way in advance, and then I'm now a Bankless DAO member, so I can vote on some of their governance protocols, and I think that's pretty cool to be able to participate in that DAO. And to me, it's not even really just participating in the DAO, it's just kind of learning how to participate in a DAO and how that works and what it's all about. And I think that's really cool. And I got airdropped a bunch of bank tokens for that to be able to provide a vote, to have some weight for my vote, which I think was pretty cool too. And I'm not just immediately ditching them or selling them or anything like that. I do actually want to participate in this DAO and to kind of, to learn the ropes, DAOs I think are the future of the way companies will be moving, whereas we move more towards a hive mentality. Organizations won't just be top down anymore, they'll be spread out horizontally, and DAOs are decentralized autonomous organizations. So interesting experiment, which is why I want to participate in this DAO, and which is part of the reason why I'm glad I have this subscription to Bankless. But just also, by the way, I'm not paid or sponsored or shilling anything by anybody or any project or any token, and I'm trying to keep it that way. Nobody's offered me anything anyway, so it's just fine. I want to be keep this as a path of discovery for me and not a path of paid representation. I don't want to be paid to represent any project. I have a job and I have an income, and for the time being, this is a learning mode in my life. So I want to keep it that way. Hey, how you doing, Valera Rimerev? Nice to see you again this morning. And that's a cool thing too, is I'm broadcasting live on Theta Network, and I'm starting to see a lot of the same people come on, and it's just kind of cool to feel like something I'm saying actually has some kind of value that people would actually want to hear, or at least they're voyeuristically jumping on and saying, wow, man, this is that's a cool little snippet of something he learned. I didn't know about that. I'll look further into that. Maybe I can inspire somebody to look further into something I happen to mention. So let's see here. Okay, so I want to go to this article that came in on the Bankless. Was this Bankless or was this Defiant? This was Bankless. Okay, so they're talking about this called Thought Thursday, and I got this this link to this interview with Vitalik Buterin, and it's coming out on Monday. But I had special access to be able to listen to it in advance, and I listened to this Vitalik Buterin talk with the Bankless people about legitimacy and what that is all about, and just the whole concept. It's like something I've never even thought of. So when this comes out on Monday, if you don't have a Bankless subscription, I would highly recommend you listen to this interview. It is pretty incredible. It makes you think about topics that you've never thought about, like what actually is legitimacy, and if you take the centralized authority out of legitimacy and the enforcement of that centralized authority, what do you have? Will it still maintain its legitimacy? And they talk a lot about the shelling effect and stuff like that. How groups tend to flock and merge and gather together without any type of centralized influence. And they talk about, for instance, what if suddenly the police were not enforcing any traffic roadways? Would people still, in the United States anyway, drive on the right side of the road? Yes, they would, because the cost of not doing so would be greater than the freedom to be able to drive on the left side of the road. So they start talking about a lot of that stuff, and then how it applies to things like DAOs, and how it applies to Bitcoin and Ethereum and other crypto projects, and lending protocols and things like that. So, and reputation systems. So it's truly a fascinating interview, and I guess that kind of ties into here. This article, they talk about lending protocols, and I guess this is a guest article by Roman Busco, founder of Lazy Ventures, and I just went to take a quick little look at Lazy Ventures. I'm not really sure what this is. I guess it's a research and investment firm. But they got a newsletter. I might sign up to it because this article is pretty interesting. But too long, didn't read. Today's leading DeFi lending protocols are pawn shops of the past. With more assets coming on chain, the collateral universe will eventually include NFTs and tokenized real estate assets. The primary headwind here is limited liquidity and poor price discovery. Uncollateralized DeFi lending will first be available for off-chain legal entities, and it is already gaining some momentum. For individuals to access under-collateralized crypto loans, two things are necessary: digital ID and decentralized reputation. So this kind of brings into Aave and Compound and Maker. They're the three biggest lending platforms, and what they kind of wanted to clear up here. Let's see over here. There's another article. Not this one. Where was it? Okay, unsecured loans are coming to DeFi. Okay. All right. So there's this article here that I read, and I'm going to link all these articles in the video description. DeFi protocols don't do lending. So there's you have Maker, Aave, and Compound. The three biggest lending protocols is what people call them. They're not actually lending. They are what would they call them? They are okay. This article explains how DeFi protocols, mislabeled lending protocols, typically function what the term lending actually means, why these protocols do not enable lending, and why it's important to honestly and accurately describe what DeFi can and cannot do. DeFi replaces institutions with protocols. The ultimate vision for decentralized finance is a self-sovereign financial system, allowing users to engage in a broad range of economic activities without the need to rely on trusted third parties. The base layers of Bitcoin and Ethereum networks already achieve that vision for the simple activities of receiving, sending, and holding money. DeFi tries to go further. The core idea is to take complex financial services traditionally offered by legacy institutions, distill them into their component rules and procedures, and convert them into self-executing code. Autonomous protocols that share the permissionless, non-custodial properties of the decentralized networks on which they reside. So far, DeFi developers have launched protocols enabling a wide variety of intermediary-free economic activities, including digital assets exchange, payments, portfolio managements, derivatives tradings, prediction markets, private transactions, and more. One popular category includes so-called lending protocols, in which users can supply digital assets as collateral to earn interest, borrow other assets, create stablecoin tracking, etc., etc. So the lending protocols are more like interest rate protocols. Users begin by supplying assets to the protocol as collateral. Supplying assets to a protocol can feel somewhat like depositing money into a bank account, except there's no third party with custody over those assets. Users maintain exclusive control over their assets at all times. And so let's go back to this article over here. The main reason why all lending in DeFi requires over-collateralization is that the parties have pseudo-anonymous identities in a true crypto fashion. The lender is not aware of the identity of the borrower and her reputation, and vice versa. This is without any credit score on the borrower. The lender can only extend credit in the amount below the collateral value. This is generally described by a loan-to-value ratio that must be below 100%. So Aave, you gotta put down some collateral, say some ETH, or maybe some DAI tokens, which is a decentralized stable token, or USDC. In Maker, you have to put down ETH in order to generate DAI to borrow. And then Compound, same thing. You put down one cryptocurrency and you can borrow against it. And so this is a way to kind of keep your cryptocurrency without selling it off. For instance, I bought a car and I used a centralized finance protocol to do it with Celsius, but I locked up a bunch of my Chainlink and I borrowed some USDC against it, and then I transferred that over to USD, and I was able to have a really good down payment on my car. And then without losing my Chainlink, which I'm glad I didn't sell my Chainlink in order to get a good down payment on my car, because Chainlink is doing amazing right now. So I'm going to pay back that money for the down payment on my car, and I'll still have my Chainlink. So it works out, and I'm happy about that. But the thing is I did not have to apply for a loan. And then with Aave and Compound and Maker, you don't have to apply for a loan. You just have to have money to get money. And but the cool thing is you won't be losing your crypto as it appreciates in value as you're borrowing against it. And that's why it's been popular. But it is not lending as per the definition. In the above example, with 100 DAI as a loan and $150 in ETH as collateral, so I would lock up my ETH as collateral in Maker, and I'll borrow $100 into it. Loan to value is equal to 67%. Currently, the loan to value in major DeFi lending protocols ranges from 50% to 80% depending on the quality of the collateral asset. This model is no different from what traditional pawn shops have been doing for centuries. In fact, pawn shops are some of the oldest financial primitives dating back to the 5th century AD in China. With the advance of financial knowledge and the emergence of various intermediaries, pawn shops have given way to credit. The principal difference between the pawn shop business model and lending on credit is that in the latter case, the lender is willing to extend more than the value of the collateral when loan to value is greater than 100. In doing so, the lender would conduct his own due diligence based on the available information and assess the risk of the default of a particular borrower. However, this exercise requires A, non-transferable identity, and more or less reliable data about this identity's creditworthiness. The current state of DeFi is that crypto pawn shops, whereby autonomous protocols facilitate over-collateralized lending, replicating the playbook of the Dark Ages. So right now, DeFi is in a state of pawn shops. And DeFi, to me anyway, the way I perceive it, DeFi is kind of a huge reaction against the abuse of the banks and the credit systems and all these fee structures and the kind of unofficial setup and sanctioning of these segregation and caste systems that have been put into place, the discrimination used and giving out loans, the qualifications for being an accredited investor and everything like that, and then just basically putting your lives in the hands of these people that are basically making lifestyle judgments on you. And what DeFi does, it subverts that and it undercuts that, and it allows you to go around this credit system, and they're pissed about it, rightfully so. So in a way, we've kind of gone back to this pawn shop model, and that's really good. But at the same time, though, it means you have to have money to be able to borrow money. And, it's kind of a good old biblical-based way of doing it. The Bible didn't like, people charging interest on loans. I think that's somewhere in Leviticus or something. I don't know. But, either way, we've kind of swung to the opposite side. Now, what if there was some middle ground? Because obviously this whole reputation system has been completely abused to allow only the haves to be able to get any decent type of loans based on reputation. I certainly don't. I have okay retail credit, but definitely can't pull out any type of significant loan. So there's got to be some kind of middle ground, and to provide some kind of equity for the credit system. And a lot of people who are in the position of the haves don't really understand everything that the have-nots have to go through in order to achieve loans, and a lot of the predatory loan places out there. Not really pawn shops. Yes, pawn shops can be predatory, but the payday loans and people wiring money overseas via MoneyGram and other services to the Philippines or El Salvador or back to Africa and wherever they want to go, and then basically paying $50 to send $50 and stuff like that. It's just nuts. So there's got to be some kind of middle ground to this. So how would you get around some kind of centralized identity? Let me think about this. Okay, you have to have some kind of centralized ID, an address, some kind of established reputation in order to be able to take a loan out without collateral. But all that depends on some kind of centralized entity and centralized control. So let's see here. What is good collateral? Good collateral have several qualities according to the framework from the European Central Bank. We'll come back to that whole idea of non-collateralized loans. For now, let's look at what good collateral is. Good collateral is liquid and safe. It's no surprise that Bitcoin and Ethereum are most commonly used types of collateral in DeFi lending protocols. Apart from volatility, they seem to meet the above criteria. Good and safe. All right, liquid and safe. And even volatility is mitigated by intermediate liquidation made possible by stable liquidity at decentralized exchanges. Okay, so NFTs could be a possible collateral as well. And I think this is pretty interesting. NFTs have skyrocketed in 2021. Yes, the huge NFT boom, which is why I think the Theta Network development for 3.0 was pushed out a little bit, because they had to figure out what to do with this whole booming NFT situation. With the proliferation of NFT owners, several teams have started building protocols for borrowing against NFTs as collateral. NFTFi, NiftyFi. Stater, it's in beta, and then PonFi, just a Twitter handle, no product yet. So let's take a quick look at NFTFi and see what the deal is for this. I will link this in the video description as well. It's asking me to connect my wallet immediately. The marketplace for NFT collateralized loans. Okay, so I got a few crypto kitties. I wonder if I could borrow against them. Interesting. So yeah, because NFTs have garnered value, and so it allows you, I guess, to borrow against it. So the problem with NFTs is low liquidity and opaque valuations due to lack of constant price feeds. Exactly. It's hard to keep, I guess, track of price feed and put an oracle on specific NFTs. It's difficult to liquidate the collateral immediately when the price drops. It's equally challenging to know when the price actually drops, given the secondary nature of the market. One way to approach a lack of liquidity and price discovery is to have NFTs tokenized back into ERC20 and trade them on DEX. NFTX and NF20 are doing that right now. Tokenization can help with the price discovery and liquidity. Let me just take a quick look at NFTX here and just see what that looks like. On the opposite hand, if we compare this to the world of physical art, authenticity is less of a problem for NFTs. That should be the counterbalancing factor. For example, Beeple art is algorithmically attached to the author, where Pablo Picasso authorship can be questioned. Interesting point. So let's see here. This is NFTX. I guess this is a market or a place where you can assess the value and potentially liquidate the value, I guess, of an NFT. Interesting. Okay, so I'll look into that, and I will link that in the video description. So let's see here. There are many different types of NFTs out there, and the question is which of them will be used as collateral for DeFi lending first, based on the quality of collateral discussed in the detail on the ECB's paper above. It will be NFT that is the most liquid and easiest to value. In the context, tokenized NFTs will be the first to serve as collateral due to liquidity. Next, in our opinion, NFT assets from games and metaverses. First, game assets, they have specific utility, fancier skins, stronger weapons, etc., as opposed to digital collectibles whose value is in the eye of the beholder. And then second, assets from virtual games are more likely to have continuous price feeds and deeper liquidity within the respective ecosystems. Okay, great points. Gaming ecosystems themselves should not be walled, which appears to be the case at the moment. Yeah, it's really hard to transfer one asset like gold or armor from one game into another game unless it's made by the exact same company and everything like that. And the exact same game. And then there's real world assets, tokenized real world assets, fiat currencies, real estate, gold, securities, stocks and bonds, invoices, tickets. They can all be used as collateral for lending on the blockchain. Fiat currencies and real estate have been already used as collateral in DeFi lending protocols, USDC and MakerDAO and Real IT tokens and Aave. So the things about real world collateral in the process of tokenization. Is there an issuing entity like Circle Internet Financial Limited behind USDC? How transparent is the issuing entity? Are reserve assets auditable? Where are the assets actually held in real life? Banks, custodians, do the assets require any specific storage or maintenance procedures? Is it a state? What are the political risks? Is there sound legal enforcement framework to rely on? So yeah, crypto pawn shops will move from over-collateralization towards more capital-efficient lending practices. For this to happen, two primitives must emerge: digital ID and digital reputation. And then it goes into corporate DeFi lending, and I think that's beyond the scope of what I'm trying to talk about here. I need to get to IDs because I'm running low on time now. Digital identity and reputation. The collateral has to exceed the amount of today. Concepts such as digital ID and digital reputation in crypto, resulting in the absence of trust that is handled only by over-collateralization. We'll stop short of further discussing decentralized identities here, given that this area is well beyond the author's circle of competence. Instead, we will point to the readers to the standards being developed by W3C in the short but comprehensive lecture by Michael Senna. founder of Ceramic. And Ceramic is working on the whole idea of digital IDs. And reputation is the data points associated with identity, allowing interested third parties to assess the risk of default and calculate the creditworthiness of a particular borrower. In TradFi, the reputation of borrowers is evaluated on the following criteria: pay stubs, bank account transaction history, credit scores issued by credit bureaus, savings balance, past defaults, number of recent credit inquiries, and lack of criminal records. For the pawn shop model, none of this matters. You just have to have the collateral, and that's good, but it's just one complete side of the spectrum. And then the other side is it doesn't matter how much you have. If you're not what they consider a good quality person, you ain't getting crap, So we got to meet somewhere in the middle. So with all these intermediaries coming on-chain, we may see the emergence of purely digital credit scores. Initially, such digital credit scores will replicate the off-chain ones, given more weight to financial factors. However, the further development of Web 3.0 technology stack and the advent of the metaverse, digitally native factors are likely to be given more prominence in assessing creditworthiness. They can include number of followers in a given social network, creation of valuable content, and other IP verifiably authored or owned by the borrower via NFT, history of the borrower's interaction with DeFi. Your wallet is not your only resume, but it's also your credit score. So they'll track your wallet, basically, your transactions on your wallet, including participant in the governance of major protocols. Benevolent behavior via participation in grant programs. And like GitHub and stuff like that. Ranking in on-chain virtual worlds, like crypto voxels and decentralized and stuff. And then guarantees or suretyship from other on-chain native subjects, such as individuals or protocols. So I guess maybe my participation in the bankless DAO protocol might give me some kind of cred, online digital ID cred. I don't know. Using factors for scoring genuinely requires decentralized identity that will be used instead of national IDs. Several projects are attempting to solve this, such as Ceramic, Bright Idea, and Edena. I did want to touch on yesterday. I listened to this interview on the Defiant, and they interviewed the founder of the UBI token. And they're doing what's called a proof of humanity. And in the context of what UBI token is doing, is they're doing it. The founder founded a political party in Argentina called Network de la Red, which is not network, Partida de la Red, which is the internet party or the network party, basically he's trying to establish voting structures. And not just voting, but governance based upon people's digital IDs that don't have to rely on centralized government type of IDs. And what they're doing is they're trying to eliminate the possibility of Sybil attacks. And if you don't know what Sybil attacks are, it's when one particular IP address or entity creates thousands of accounts and tries to use them to overrun networks or systems or voting protocols or consensus networks or blockchains or anything like that. They try to overrun the nodes with a bunch of these made-up IDs to take over 51% of the power. So for instance, like a 51% attack where 51% of the nodes are controlled by one single force, and therefore influence maliciously decisions that are made for governance on particular blockchain networks. Or in voting, if you were to attack a voting protocol with tons of different IDs, and then you would obviously influence the sway of the vote if you were able to submit 50,000 different votes, based that are basically bots. And so what this proof of humanity does, it's a protocol that it came out March 12th, I believe, to be able to allow people to create a digital ID that is not based upon any of these things that we mentioned in this article, such as pay stubs, bank account transaction history, credit scores, and anything like that. It is based on proof of them being a human being first. And then once that is established, this ID is attached, and that they have proved that they're human, usually with little video that they have to say a few words into, and then they have to have somebody else vouch that that person is actually a human being. And so it takes that, and that's kind of like, yes, it does kind of establish that somebody's a human, and it eliminates the possibility that they're a bot. But then they're creating kind of a database of all these people in a registry online on the blockchain of who these people are tied to these particular crypto addresses, these Ethereum addresses. And so basically your name is then going to end up being tied to an ERC20 token address. So I'm going to have to get further into this. I mean, I just listened to some of the basics last night on this podcast. But it's interesting. It unlocks a bunch of new possibilities by being able to establish that you're a human online and not a robot. It can be used for human DAOs, like the DAOs, the quadratic funding, certifications, social key recovery, self-sovereign identities, credit scoring, airdrops, and anti-spam tools. Your digital identity, digital government IDs, pros and cons. It's simple and easy to scale. Cons, vulnerable to rogue nation states duplicating or censoring identities. Now these people that built this, they're from Argentina, and there's obviously been a lot of issues in Argentina with a lot of voter fraud, and I mean, I can say there's probably been a lot of issues here in the United States with a lot of that stuff lately. And then with this whole forcing of IDs, with this new vaccination passport that's coming out, that a lot of people are trying to push, that a lot of institutions are trying to push on people. So this is a huge question, and it's becoming a huge point of concern. Your digital ID reverse Turing test. The Pro is decentralized and still fairly simple, and then requires all users to meet at the same time and is vulnerable to AI. Okay, social graph analysis. Pro is decentralized and easy to scale. Cons, very complex and vulnerable to advances in AI. The proof of humanity, what they're trying to accomplish. Pro is decentralized, AI resistant, and economically incentivized. Cons, more complex. Yes, it is more complex. Let's watch this quick little intro video that they put up here. Let me find that real quick. Here it is. Okay, so do this.
A robust human identity system is key to putting people in control of their digital interactions. Is, for example, the person you're speaking with online human or an AI bot? We introduced Proof of Humanity, a social identity system for humans on Ethereum. Proof of Humanity enables new and secure ways to manage your online identity, transforming how you access applications and financial tools like DeFi apps. Using a combination of crypto economics and local trust, Proof of Humanity can become the internet's social backbone. The first application released will be Universal Basic Income. Together with Democracy Earth, a UBI token is streamed in real time to every successfully registered profile. Proof of Humanity is the beginning of a self-sovereign digital identity, a unique on-chain version of yourself with financial incentives to boot. Register now. Forge your online identity and start receiving UBI.
So yeah, this is the UBI token, and it is kind of a, you register in there. I don't know where this information, whenever you register, is. This is a different one called Bright ID. I didn't get the time to talk about that. And then here's Ceramic as well. I'll link all this stuff, but I wanted to focus on this one because this is about the podcast that I listened to on the Defiant, and you know, it sounds pretty compelling. And apparently you earn UBI tokens by registering on there, and you participate in the network, and you can stake on the network as well. So Universal Basic Income is your right as a human. Proof of Humanity is launching with Democracy Earth's UBI token. Our verified humans will be the first decentralized UBI recipients. We also launched a sustained liquidity provider rewards program, and you can provide liquidity in ETH UBI and DAI UBI curves on Uniswap and farm a share of UBI rewards minted over the course of the next year. Check it out. So I don't know. I'm just obviously just touching on this, and I'm just kind of letting you know it's out there. I'm not here to sit here and review this project. Maybe I will go into further detail and review it at some point. But I will link all this stuff here for you to do your own work. And before you just completely scream and run away at the thought of a UBI and communism and socialism, maybe take a look and listen to the interview and hear what he's trying to say. I don't think that he's trying to approach this from some kind of communist or socialist perspective. He's trying to approach it from a fair voting perspective. And then to tie it back into this, I think that it can be used as maybe some kind of fair middle ground for creating some kind of digital ID reputation system that's not completely 100% collateralized loans like the pawn shop model, and it's not completely oppressive like the current credit system that we have right now that has completely been abusing its power. So, and creating a total class and caste system and of accredited investors and the haves and have-nots, and you know the deal. So anyway, that being said, I gotta hit it today. I gotta get on with my day. I want to talk more about this stuff. This is a huge hot topic right now going on, especially with people trying to push the vaccine passports all over us, and it's kind of like, you know, without even letting anybody think about this stuff, you know. And the more pressure that I get to jump on this whole bandwagon with all this stuff, the more resistant I am becoming about it. I don't like to be pushed into anything. So, hey, how you doing, N81? And nice to see you. Thanks for jumping on, but you're jumping on just about right when I'm about to jump off. But, yeah, maybe you can see the replay of it on YouTube. I'll be on BitChute and Odyssey, and give a thumbs up on any of those channels. I don't ask for money. I'm not bumming for money, but I will take an attaboy. Yeah, so give me a thumbs up. All right, so yeah. Got to get on with my day and do the deal. So just things to think about. I've given you a lot of stuff to start with. If you want to do a Saturday night down the rabbit hole tonight, I'm going to put all these links here, and you will definitely be able to go down a whole rabbit hole with about digital ID and reputation and the pawn shop model and what all that means, and then the whole concept of legitimacy. If you aren't a subscriber to Bankless, then you'll be able to listen to this interview with Vitalik Buterin on Monday. So it's a really good interview. And then listen to this interview with Camila Russo on the Defiant with the I can't remember what the guy's name is, from proofofhumanity.id, and him explaining the concept of this. So yeah. All right, man. Thanks for the attaboy, N81. All right. All right, well, I'll talk to you guys tomorrow. All right, bye.